Hello and welcome to Weekend Investing Daily Bites. We are shooting episode 236, and today being a Friday, we are shooting Ask Weekend Investing Round. So these are videos where we try to answer all queries that we receive on Twitter or through email, and we try to answer all the queries relating to either small case operations of weekend investing products or any product related queries or queries in general, if you ask me. So this is the agenda for the day. In terms of the market was in the positive territory today. So this current range that the market has established, about 16,000 to 16,350 odd, we have been oscillating in this range for the last more than a week now, and today's rally was led by IT stocks at 2.5% up, and also banking stocks that were up 1.8% in private banking, and PSU banks up 0.8%. Auto stocks were also up at 1.5%, and Nifty overall closed at plus 1.13%. What was down was public sector enterprise stocks, energy stocks, commodity stocks, and metals were a bit flat. So this is still, I would think, not resolved the range of Nifty. It is still not clear to me, at least, that we are going back up. We may stay in this range. The market may come down again next week. We are pretty much following the lead of the mother market, the US market, on this. So a reasonably quiet day, I would say, slightly up, but not very conclusive. In terms of indices, yes, all the indices moved up about 1% except Nifty Next 50. In terms of weekend investing strategy performance, NNF10, Evergreen, MI20, MIATH2, NG 50/50, they all were 0.5% to 1.5% roughly, and the others were a bit muted. We have had very large cash raised in 3 or 4 strategies, and hence we are waiting for deployment. The strategies that are rotational in nature are having more volatile movement along with the up and down of the market, and those that are absolute are a bit more flatter, given that they are mostly in cash. In terms of top gainers of the day, in the top 500 stocks, AstraZeneca and Godrej Industries along with Dr. Path Labs 10 to 12% up, India Mart up 8% along with Whirlpool, and on the way down we had Piramal Enterprise down almost 12%, Go Fashion, Gas Authority, ONGC, Triveni Turbine all between 5 and 6% down. So these were the top losers for the day. So we've so far answered 512 questions in the previous 25 rounds. All these 25 rounds are available on the Weekend Investing Hub. I'll also put the description of these links in the description of this video below. You can go through these rounds. If you are new to weekend investing, I would heavily recommend that you go through these series. It will really clear not just weekend investing, any small case. If you are using these question bank will really help you in understanding the entire system, and going through all the important repeated frequently asked questions about small case investing. So the first question, 513 today, is from Vinod, referring to the Weekend Investing Hub. The current drawdown in many of the weekend investing strategies are much higher than their respective indices. Outperformance on the downside is one of the key strengths. Your views? So yes, this time we have had underperformance on the way going down. If this market move is going to get much deeper, then we will see many of the absolute strategies not going as far down as the indices. But yes, maybe given the sudden nature of the fall this time on many stocks within the last couple of weeks, the current underperformance is definitely there. we have seen this once or twice in many falls before also, but in general, I would think that most of these strategies will outperform on the downside, but of course, there are always exceptional cases. The next one is Great India question. How stairs expiry subscribers should manage a day like 26th May when Nifty suddenly turned and all profits erased? Yeah, so that was unfortunate that we had a very good profit in the morning on Thursday, but by the evening that converted into a loss. While in the back test we have not assumed any exit before the end of the day. If during the day we come very close to the max profit that is possible, the premiums, let's say, drop below 5 rupees or something like that, then we could look to close that position in future. We will discuss this internally and add a rule if there is required. But yes, I mean, these are the perils of a volatile market. Next one is 515 from Mr. EMK. A question on liquid Bs. When we sell the liquid Bs, will we get the entire amount on the same day or only 80% of selling? So exactly just like the other stocks, you will get only 80% credit on the day of the sell, as far as I recall. Next one is from Mr. Dreamer. Do you believe in long-term investing means holding a stock for 10 years plus, even if it is giving drawdowns in between during this duration? Heard many big rockstar investors created wealth by holding their stocks for really long time. Please enlighten. So yes, you're right. I mean, if long-term investing is your game and you are able to identify great stocks and hold them even through steep drawdowns, I mean, why not? I mean, you should be doing that. But investing, as far as I have understood it, is a game of knowing yourself and then finding out ways of investing which are suitable to your nature or suitable to your psychology. So my sense of investing is that I don't want too much pain in my investing, even if it is at a cost of a lower CAGR. I don't want to bear that pain. If I can get 15% with reasonably less pain, but 20% with a lot of pain, I don't want that 20%. So it is all dependent upon your individual outlook. If you are good at picking stocks and you are good at patiently holding them for 10 years or more, if you are strong in your psychology that if you see your stock falling 80%, you don't really have sleepless nights about that. I mean, definitely you must do that, but that was not my cup of tea, and hence I promote things what seems suitable and sort of logic driven from the perspective of ease of holding as well as the ease of understanding what you're doing. So if you understand momentum, you can see that there is some sort of a logic to it. Yes, it may not work all the time, but there is a logic to it, whereas a lot of conventional investing becomes very, very illogical at times. So, each one will have to suit their own strategy and style. There's no one right answer. Let's put it this way. Next one is from Mr. Anukul. When there is a stock purchase and liquid Bs in a rebalance, why does it buy the liquid Bs first and leave out the stock purchase? Given the entire funds are not available at this point, ideally liquid Bs should be given the last preference. So that's a good point. I will try to share this with the small case team and seek their thoughts about this. This is a very valid point, and maybe they can create a change in their algo which can help this. So if there's a revert back from that team, I'll definitely put it up on Twitter. Next one is from Mr. Ritesh. As momentum has taken a backseat in current market scenario, do you think one should park the liquid funds, cash in blue chip companies which are available at sale, maybe from the strategy side itself, or will it create confusions? So Ritesh, if we are following momentum investing strategy, Then to go from momentum into some other style for the time being, and then once the market starts to go up, to come back into momentum, I mean, this kind of switch is very difficult to do. So better would be that you create two silos, put some of your capital into momentum investing, put some of your capital into conventional investing, and then run them separately. Or if you are able to do the switch in a very smooth manner, then you'll have to do it, at your end. From a strategy perspective, we will not try to guess at what point has momentum stopped working and at what point will, the next wave come in for the NAV to go up. So what we are trying to do is to reduce the friction of trying to guess, trying to forecast, trying to predict, hoping that what we are doing as a strategy, as a structure of that strategy, will take care of this automatically. Yes, we may underperform for some time. Yes, we may not be able to buy the blue chips at the lowest point. But then overall, over the cycles, we have seen that it does not make any difference. We probably are doing much better than a lot of conventional investing out there. So why take the extra stress and the confusion is my sense of things. Next one is question 519 from Mr. Pavan. In one of the daily bites, you presented how weekend investing absolute momentum strategies go to cash when market goes down. So we are in cash in many of them, and you would have seen that by now. Would need one more daily bite on what basis your products start to add new stocks when the market reverses, so that I can plan to bring more capital via invest more. So when the market goes down, let's say a strategy like all-time high strategy, it will start picking up stocks when stocks start to hit all-time high again, or they'll be near all-time highs again. So as and when that phase comes back in the market, where the stocks, along with the filters that are there on basis the volume or the particular type of stocks in terms of market cap, etc., when those start getting picked up, it will automatically come into the strategy, and you can bring more capital in at that point of time. You will know when the cash components go down, because now we also display the cash component in the daily bites for each strategy, for the absolute strategies. So I hope that answers your question. Dr. Ashwajit has the next one, a general life question. I am not sure if I am qualified to give you answers for life questions, but yeah, I'll try. Would love to get your view on this. So if you would have to advise someone who's in his 20s with good capital, what would you advise him? I would advise that you start investing left, right and center, because you have the advantage of huge time on your hand, and then the compounding that will come even with low returns. Even if you're compounding at 12%, 14%, 15%, and you have a huge runway of your life ahead of you, I mean, you'll do wonders. Why has Warren Buffett done so well? Because he started very early, not because he's done amazing CAGR. I mean, Jim Simons is much higher in CAGR, but because the runway of time was with Mr. Buffett, that's why he has done so well. So if you are in your 20s and you have capital, I mean, that's the best of both worlds. I mean, you have money as well as time. So that's the sort of general advice I would give. Don't be fearful about investing, because you have the time. Next one is from Mr. Ashish Ghosh. Why ATH is going back to stocks from cash while there is seemingly no upward movement, as it is already in bad phase? Do you think that strategy needs a re-evaluation, because absolute momentum cash to stock happens generally very slowly? So ATH2 has been a disappointing run since we started. I'll admit that I was not expecting that ATH2 will not perform like this. But it's an aggressive strategy. It's a high risk strategy. It probably should be a small part of your portfolio in terms of a high risk satellite strategy. But nevertheless, it is very aggressive. So it will pick stocks very quickly, even if they are very near their all-time highs. It has lesser market cap as a filter also on it versus the other ATH. So, I mean, if there are stocks that are going up, even if the market is going down, it will pick those. I mean, these are strategic sort of rules that, I mean, we don't have any absolute rider over those rules that today I don't feel like that the market will go up, so I will not take that decision. So, I mean, it doesn't work like that. It's very robotic from that perspective. So, yeah, I mean, I'm also waiting for this strategy to come out of this sort of phase that it has gone into. But we'll not stop taking decisions because of that. Next one is from Divya. What's your take on piling up drawdowns in rotational momentum strategy in this bear market, considering the strategies are relatively new in comparison to absolute ones? Shouldn't newly added stocks given some time rather than exiting in deep losses? So, as I said in the previous question, we have no discretionary rule or action that we take place in any of these strategies, whether it is rotational, whether it is absolute. These are strategies that were thoroughly backtested. Many of them already have run 5 or 6 years in live environment. They have been tested under near live conditions. So there is no reason for us to sort of not believe in those strategies. Every time the market falls, there is a propensity to sort of give up on the strategy, give up on whatever you're doing as a user, because me as a provider have a different level of confidence, and you as a user may not have that level of confidence on momentum investing or on any strategy. But what I can tell you is that the same strategical rules that are followed all across in all the past years, in all the back tests, everything are continuing to be followed. So I would not pay too much attention to some drawdowns when they happen. But yes, I mean, drawdowns are a part of the market. We cannot have strategies going up or outperforming all the time. So, I mean, the best of fund managers, the best of outperforming funds also slow down at times, and then they catch up later on. So this is sort of reality of life. I mean, you can't have something which keeps winning over everything else all the time. I mean, it just doesn't happen like that. So I would say bear with some pain if it is coming your way. I can assure you that we are running the strategies as per the rules that we have framed them in, and we are hoping that those rules will be good enough to see us get through these troubled times. Next one is from Mr. Mittal. Are you thinking of bringing midweek, not Monday, rebalance in rare cases? For example, stocks like Privi, Deepak Nitrate came down 40-50% from all-time high in 3-4 sessions. This takes away all the gains in last 6 months and we are back to even. Please evaluate midweek exits for such cases. So, Abhimanyu, this is I wouldn't say your point is wrong. I would say that the strategies have run on the current rules and back tested on the current rules. So if we have to go back and see what would have happened had we taken a daily decision or ad hoc decision, then all the entire history is useless. Then we have to create a new history of last 10 years or 15 years or 7 years of data that we've run each strategy on, to see on each day had something fallen 40% and next 2 days it came back up 20%, it would have been an exit and not included as it would have been on a weekly basis. So essentially again I'm coming to the same thing, that the rules that have been followed are getting followed. Now sometimes it will happen that some stocks will drop off, and that is the reason for higher diversification in strategies which have mid cap and small caps, is that if you have 2% exposure, if you have 3% exposure, if you have 4% exposure to a stock and that drops by by 40%, I can assure you that in most of the cases, even if you were to do a midweek exit, most of the damage is already done by then. I mean, most of the damage gets done in one candle. or max 2 candles. So by the time you will react by midweek also, most of the damage will be done. Very rarely will you find cases where 5 days it is coming down by 10-20%, and if that rare case happens, we take that as a 2% hit to the portfolio, and 1 or 2 stocks will do that in a year. So that's from a strategy perspective. But if you feel very strongly about stocks coming off and you want to improvise on the strategy, then you can create a layer of rule on top of the strategy. Maybe you can put a 20-day moving average on a stock and say that if it comes down and the strategy still holds it, I'll exit from it, and then I'll take a decision again on Friday. If it still is held in the strategy, I'll come back to it, or something like that. Some people even plot moving averages on the NAVs of the strategies and exit below a certain point, for instance. So if you are very particular about keeping your drawdowns even more tighter, then you could use your own layer on top of this. But from a strategy perspective, it is very difficult to re-evaluate the entire strategy from a totally different rule-based perspective. But yes, I get your point that as some stocks do fall very steeply, and that's the reason why the diversification angle was brought in. Next question is from Mr. Sharad. What is the better way to structure the SIP duration for someone sitting on cash corpus meant for equity investing? For a person getting periodic inflows, he accordingly decides on inflows, but someone with cash of say 12 lakhs over 12 months. So this question is best answered by your financial advisor. I am actually not allowed by my license to offer any specific advice to anybody. So I will not be able to take this question, but please do consult with your financial advisor how, based on your goals, based on your age, based on your situation, how he should distribute coming into the market. If you ask me, if I get a windfall from somewhere, I'll distribute it over 2-3 years. I am in no hurry to put all the money that I suddenly receive into the market. I'll distribute it over a 2-3 year period, so that I am not stuck at the highest point in a cycle, or I'm not expecting to be so lucky that I deploy it at the lowest point. Over a 2-year, 3-year period, I'll deploy it gradually. So maybe you can draw some inference from there, but I mean, that is something that is very personal in terms of how you want to deploy. Next one is from Mr. Mendiratta. How do we manage stairs expiry model? This week we were in good profits and booked loss end of the day. Last week too, Nifty changed the morning. We carried position till end of the day only to be bigger loss. Is there a provision to square off early? So as I said in the question earlier in the session, once the profit model comes very close to the max profit, we can consider to close the position there. That will be a discussion that we'll do internally and come out with a rule based on that. But the expiry day is a aggressive model, and sometimes we will lose, but sometimes we'll make some big wins also. So we expect that overall in a year on the 52 expiries, we make some decent money on that, and that's the expectation actually. Next one is from Mr. Gautam. Can you please share ATH 2 years wise backtest data like 18, 19, 20 individual real returns separately? It shows CAGR since 2016. So year wise data, okay, we'll try to get this for you. Please drop us an email and I'll get you that data. That should be available, yeah. Next one is from Mr. Praveen Raja. If one reaches the prescribed investment limit of a weekend investing small case, what are the options to invest more? So far we have allowed people to be at or slightly exceed recommended limits of each portfolio. We have not come down with any bar or any disqualification of renewal based on that. But my sense is that one should not exceed the prescribed limit by in the recommended limits, because those strategies are designed, or at least we calculate how much slippage may happen based on the number of people and number of amount of AUM in that. So once you've reached a limit and you feel comfortable, you try to create a basket of strategies. So if let's say you are in NNF 10 and you've reached certain limit on that, then you could add something which is not large cap. For instance, you could add a mid and small cap strategy, or you could add a all cap strategy, or you could add a only small cap strategy, or you could add a sort of a higher risk satellite strategy like ATH, ATH2, etc. So on and so forth. So try to mix and match the different segments that you have. Like for instance, NNF 10 and MI20 go very well. For instance, MI20 is made up of stocks from 100 to about top 450 stocks, and NNF 10 is 51st to 100 stock. Or you could look at Evergreen, which is top 200, and MI35, which is only small caps, or even MI25. So this is the way you can sort of mix and match different segments of these products. Next one is from Mr. Saurabh. In all your strategies, which one you prioritize more? Cutting loss early or letting winners run? I am not sure what this question is. In all strategies, the basic theme is to let winners run and cut losers early. The extent of allowing winners to run and cutting losers early may be different in each strategy. So for instance, ATH, ATH2 will cut losses earlier. LTSNX 200 or MI30 will cut losses very late. So there is low churn in that. ATH, ATH2 may have very high churn. All cap is somewhere in the middle. MI25, MI50 also will allow the stock to move a bit before they exit. So the elasticity of the exit is different in each strategy, but all strategies have the basic theme is the same, that cut your losses early and let your winners run. Next one is from Vinod again. Would love to get some idea on highest subscribed weekend investing small case. Okay, so this has to be MI all cap. Which of the weekend investing small case has the highest AUM riding on it? I think this is also MI all cap. Is it possible to publish subscriber count and approximate AUM for each of these WI small cases? I don't think this is necessary to, for any decision making which strategy you should go for. I mean, this is a business statistic which we don't really share. Plans for a YouTube live session with your subscribers? Sure. So we are already started doing YouTube live for stairs since last month, and I have also requested my office to start a YouTube live for weekend investing products. So I think within the next few weeks you will be able to see that. Next one is from Dev Khare. I hope this message finds you well. Thank you very much. I just want to ask you, can a government employee do investment in stock market through small case platform? Yes, why not? I mean, I don't think the government is stopping its employees from making investments. Yes, there may be some companies, for instance, which are listed companies, there may be some bar that you may not be able to buy those stocks. That you must find out from your human resource department. But other than that, I mean, the government is a very liberal government. They don't, restrict you from doing any investing. So thank you so much for watching the Daily Bite and the Ask Weekend Investing Round. I hope I'm able to give some solution to your queries. I'm sure I can't answer all of them to your full satisfaction, but I do try my best. And while we are in a sort of a slight tricky situation in the market, there is a bit of a drawdown. New users are finding it a bit difficult. But those who have come in early, 2 years, 4 years earlier, they know this is par for the game. and Indian markets fortunately have not dropped as much as they could have, thanks to the retail participation that we have. So please accept the thorns along with the roses as and when they come. This is part of the game. So thank you so much for watching, and I'll see you in another video. Bye.